Hey everybody, how's it going? So today we're going to be going over Upstart. They're kind of like a tech company. I don't know too much about them, but they were going crazy at the end of last week. So we're going to review their financials, see what's going on there, and I'll give a review. So make sure to subscribe and let's get into it. All right, everybody. So this is Upstart Holdings. So we are just going to get right into it. Cost of capital is a little high there. I'm not going to take the full credit off only because with the way their company is most likely very high growth, I can't imagine that's too much of a bad thing. But looks like the target price is way below. They're at $81. Target price is at 45. Now, to be fair, this company also did just explode in value over the last couple days. So that is definitely most likely going to be updated soon, but it's no big deal for this. Long-term growth rate is 77%. That is fantastic. Let's head over to the income statement and see if we could keep rolling through it, see what else they have. So sales look like fairly consistent growth. This is over the quarters as well. Let's go to years. Years, it's actually down over the past few years. Up 2021 was a good year, but down over the past couple, which isn't the greatest thing. Let's go back to quarters. Maybe we could see some improvement. So it looks like 2021 was a great year for them and they've been declining, and then beginning of 2023 they've kind of been bringing it back. They did just release a quarterly report like 2 months ago that was much better, especially with their EBIT, which is actually negative. I'm gonna do the 0.5 for sales. And then operating income, it seems like it's been improving. They, I guess they just never have had a positive operating income. But again, it's improving over the last three quarters. Um, that's about it. Honestly, I'm gonna give it the 0.5, but let's look at the years, see what that looks like. So yeah, just big negatives over the last 3 years. 2021 was, I guess, a good year for them. Um, but it seems like they're coming back a bit in the quarterly, so I'm still going to keep the 0.5 there. And then net income most likely won't be any better. They actually almost turned a profit in the last quarter, though, and it seems like they had two more of an improvement at the very least. But while they have been improving over the past two quarters, it's not enough to give them the full credit, in my opinion. EPS is going to be the same story last two quarters. You're probably wondering why I'm doing 0.5s for all of this. Just based on what their last earnings report was, the one that they just released a couple days ago, it seemed like it was so good that the company, I guess most majority of people seem like they're turning around. So I'm going to also assume that. In terms of their total shares, they've been fairly consistently going up. 82 2 years ago, now they're at 91. So that's not great. Um, let's check out the balance sheet, see what that's looking like. So cash is good. Very little short-term debt, a decent amount of long-term debt, but their cash seems decent. Let's go into years for the balance sheet. That might assets. So assets have still been increasing despite them not making as much in sales, which is interesting, but also could be a problem. But in terms of short-term, long-term, short-term debt is good. Cash is decent. Assets are increasing a lot, which is good. Short-term debt is good. Very little short-term debt, which is always a good thing. In terms of long-term included, not great. not decreasing either. And then retained earnings, possibly good, not really. Last 2 years has actually been increasingly negative, which isn't great. Hasn't been positive too much. So let's check out the cash flows. I'm assuming the cash flows for them are actually going to be pretty good, and it seems that I was wrong. Operating cash flow for the past 2 years have been big negatives. Apparently, they're bringing it back this year. Let's head over to the quarters and see. I'm assuming that recent one that they just did is the reason for this. So nearly a triple in operating cash flow, which is very good. I'm honestly going to give the full credit for that because we're seeing 3 straight quarters of improvements as well as a very, very large improvement. Investing cash flows look decent. Looks like they're purchasing investments, which is usually good to see. So for their financing cash flow, it looks like they have been kind of back and forth, positive and negative. I don't think that's worth a full zero, but I mean, they've also been adding more stock, but reducing debt, which is good. I mean, not a bad thing. They also issued some debt. So kind of half and half for the financing. And then for their free cash flow, it's again the 3 or 4 quarters of improvement, which their free cash flow has also tripled in the past quarter or so, which is always good. Cash, let's see, we want to see some repayment of debt, which we are. The only thing is they are issuing as well at the same time. So not great there. Issuance is kind of outpacing repayments, so that is another zero there. And then for stock repurchases, basically nothing, actually nothing. And other than in 2022 they were. But it looks like they've been consistently issuing, not a ton, but a decent enough amount in the past 2 years to most likely help with their cash flow. Let's check out the ratios. I'm guessing the net margin is going to be improving. So you can see it's been rough 2023, 2022. Let's see what the quarters look like. So it's still negative, actually, despite kind of the last 3 quarters of improvement, which is not great. Very, very largely negative. So not great for the net margin there. That's going to have to be a zero. ROA, ROE are again negative and not really growing. I mean, no, not really. But again, negative. And then debt to equity is consistently decreasing, which is good. So yeah, I guess that's their positive there. But yeah, I think that's it for Upstart. So 11 out of 22, 47.5. Not the greatest, not what I was really expecting. But what did I say there? 47.5. So not expected, but I mean, it's still a fairly young, high growth company. So it's definitely something to be watched closely. But I think that's about it for Upstart. So see you in the next one.